to the stock market morning prep video for Wednesday, April 23rd. Green across the board, yet again 6 days straight right up, and now we're into some heavy resistance. So we're going to see what happens here. Dow Jones up 65, Nasdaq up 39, S&P up 7, and Russell up 13 and change. So a little less than 1%. Russell did post a little bit better, 1.16%. So not too shabby for yesterday's price action. And really, the market came out of nowhere. Now we do have the last 14 Tuesdays we've had some positive gains, so that also helped. But really, big pharma, we had some big mergers and big news coming out of big pharma, so that kind of M&A activity does help speculate risk. So that was pretty decent. But yet again, markets were to me yesterday was very difficult to determine, do you jump on board for the day after 6 straight days, or does the market reverse? And I was my cue was to be a little bit more on the safe side than anything. However, now is where it gets interesting, and we were looking at a 1860-ish for a spot to get short. That blew right through it, so obviously there's no trade. But now we're at even better areas of resistance where we're looking to see if this market will start to roll over again. Now, we do have midterm election years, and looking at the Trader's Almanac book, I like to look at that is one of the most weak part of the year, where it comes in from April 22nd through October. So we're right into the sweet spot right now, and let's see if that does happen. Remember, we look for history to repeat itself. Doesn't mean it has to happen. So we're not looking for everybody to go out and short the market. But at that time, we're also looking for, markets tend to decline every 18 months about 10%. And we haven't had a correction past that. So I think it's been over 30 months, I believe, for a 10% full correction. So we're looking for something. I am looking for some weakness. I've been mentioning that, aside from, of course, the holiday reversal I mentioned early last week. I am looking for the markets to at least gain some weakness. Now, it's all about the transports, though, and I'll tell you, the transports made new all-time highs, but it has done so a few times this year, and the markets have rolled over. Now, why? Well, it's more prudent to wait for pullbacks and enter the market than at all-time highs, and that's what's really happening here. And I think that just because the markets made all-time highs, as far as the transports made new all-time highs, I'm not saying to go out and look to go buy the market, especially at these levels. So we're looking for a pullback. I'm going to be very patient on that pullback, but I do think that pullback will be bought once we get that weakness. So keep a light book, and remember, like I said, when in doubt, cash is a position. It's very important to understand that, right? Especially these markets are they're just crazy. It's just, it's insane. Markets reverse back and forth. They don't want them 6 days ago. Now they can't stop getting enough of them. So, and that all comes based on the algorithms and the high frequency trading. When they keep probing the market, they just keep pushing markets up and up and up. And then the same thing happens to the downside when you get these extreme price levels moving lower. Okay. Also, one more point, that this move has been on no volume. Okay, and we have some negative momentum on all of our momentum indicators forming while price is moving higher. So there's a bunch of red flags out there. We're going to run through the indexes. Let's take a look at them and then see where we go from here. Okay, we'll start with the spiders. As you can see, 6 days straight up. Great. Not a bad move up, but it's suspect. We have no volume, and we have negative divergence on our MACD, and our stochastics couldn't even get back up to an overbought state. So not looking too good here on the spiders. I'm looking for a break below yesterday's low in pretty much all of the indices. But here's the spiders, 87.20. You might want to write that down for a break lower. Transports made new all-time highs. The volume was pretty good, but what's happening here with the MACD? Take a look at the MACD. Our MACD is lower, and we're making negative divergence, lower lows, lower highs, and we have markets moving up. Okay, so the volume was a little bit better, but I would be really looking to tighten up stops if you are long the market or heavily long. I would prefer to have a couple, maybe some spreads on, and maybe some small, but looking for intraday price action is probably the best thing to do. Take a look at the IWMs. Now, Remember, you'll see repetitive patterns here. We have a downtrend line, a heavy downtrend line, and we're approaching a 50-day moving average. We bounced off the 200, but look what's happening here. Negative divergence forming as the markets are going higher. We have MACD and stochastics moving lower, and this is more pronounced than the spiders. And look what's happened here. No volume. So this is one of our good risk takers, right? We want to measure a good gauge of risk. Volume has been anemic, and we are moving lower on our MACD and stochastics, so we have negative divergence here forming, and this downtrend line is going to really need to get back out of the downtrend line, meaning that's going to take out the 50-day moving average, and of course this downtrend line about 116, call it, and that would probably need to stick around for a couple more days and then break higher, if in fact that we want to challenge the highs in the IWM. Okay, but I don't think that's going to happen at the moment. So let's see if we get this reversal. Remember, yesterday's low, 113.30, call it. I would be a better short sell. Now, the Qs are even more interesting to the downside. We have large cap momentum stocks, the LinkedIns, the Facebooks, the Twitters, Baidu, Amazon, Google, Chipotle Mexican Grill. All of those high flyers are really taking it on the chin. Netflix had earnings yesterday, sold off half of the move. So this is something I'm going to be watching. And I'm going to look at a break below yesterday's close at $87 on a closing basis. That would entice me a little bit more to start looking to short the Nasdaq with your stop just right above the uptrend line and of course the downtrend line forming right here. Okay, this looks a better short than the other indices, as well as the Russell. Russell I do like too as well. So if you're looking to look to do something, as long as you get your confirmation and of course your trigger, then I would be looking for lower prices as well. Okay, but you can see here negative divergence here in the MACD stochastics on the daily chart. Diamonds, not doing too bad. It just surprises me on the diamonds, which is the Dow Jones ETF. It tends to move. It's kind of a sloppy player, but a lot of people like to look at the Dow because the charts are a little bit cleaner. But as you can see, it really doesn't tell the full story when you're looking at all of the other four indices that we follow. Okay, but again, this is not doing too good. This actually looks better than actually all of the four of them. So I want to look at some. Let's take a look at some sectors here. Now, remember I've mentioned many times I like the banks. I like alternative energy, solar stocks, and coal. And of course banks for 2014. Now, remind you, it's for the year. So when they come out of favor is when you want to buy them. Now look at the downtrend line. Look at this beautiful move up. Now I like this SUNE. They also had some news that David Einhorn, Greenlight Capital, one of the fund managers, also took a big stake in it. That just goes to tell me that the solars are going to be in play, and they have been. But again, they just run up and then they roll down with risk off, so you have to understand that. So you might want to build a position, not here at the top, obviously. Let the market come in, let it come in a little bit, and then look for a better play in SUNE. And then, of course, the TAN ETF, just to show you how it's now back above the 50-day moving average. So look for the ETFs that you like to trade and dial into the ETF as far as the holdings are concerned and pick 2 or 3 of the best looking charts that fits your trading plan and look to trade them. So that's the way I find my stocks, is really looking pretty good. For solar, you can see here, had a real nice, kind of a little bit of a decline here. And we have this bull flag, if you will. And now we're starting to move up a little bit higher. So I think this thing challenged the highs and then breaks up. I mentioned 75 to 100 early, I believe December, January, and it's already at 73, 75. So really, the next step is going to be 90 to 100 on First Solar. It's not going to get there in a day, but this is a sector that I do like. On any weakness, you should be accumulating the solar stocks. Now, banks are a different story at the moment, right? Banks look terrible. And that's part of another thing as far as a market correction is concerned. When you don't have follow-through with the banks on a rally or some of the semiconductors, it should be labeled suspect. So I do like the banks, but I like them when they start getting momentum to the upside. That does not mean you can't buy banks at lower prices. Just determine the amount of shares you're willing to buy, and then look to accumulate it. As you can see, JP Morgan, just terrible. I mean, absolutely ugly. And then last is the XLF, okay? The XLF got literally back above it. We're just sitting underneath the 20-day moving average. So let's see what happens going forward. But I do feel that it feels like we're ready for a move lower. Now, that doesn't probably not going to happen right away, and and the reason why I'm saying that is the markets like to fool the masses. You hear me say that all the time. I think the markets will either pop up one more time, maybe make new highs, intraday highs, and then pretty much roll over, get everybody up along again, and then the markets roll down. So remember how the markets works. The markets are made to fool the masses. It's just not that easy. Oh, we made intraday highs, and let's keep going higher, or now we start to sell off. So I do think that there's weakness to come. We're in a seasonal period of weakness now through October, especially with midterm elections. When you have 10 out of 16 midterm elections, the markets were down 10%. So history is on our favor for a market correction, for a short-term market correction. You have sell in May, go away. So everything is pointing to the downside. That does not mean it's going to happen. Remember that. However, these videos are to inform you, to keep you on the right side of the trade and keep you out of trouble. So, and of course, trade ideas. So let's make sure, let's wait, because when the markets start to sell off, there's going to be a lot of opportunity to the downside, okay? Have a great day. Hope it helps, and we will see you tomorrow morning. Take care.